Have you ever heard someone say, I salary sacrifice into super? Or, my employer salary sacrifices my car? Or even, I get extra benefits through salary packaging? And thought, what does that actually mean? Today I'm going to explain salary sacrificing in plain English, the different types available, and why some Australians can save thousands of dollars each year by using it correctly. Let's get into it. What is salary sacrificing? Salary sacrificing simply means agreeing to give up part of your future salary in exchange for another benefit. Instead of receiving all of your pay as cash, some of it is directed somewhere else before income tax is calculated. Because the money comes out before tax, it can potentially reduce the amount of tax you pay. Think of it like this. Imagine you earn $100,000 per year. Instead of taking all $100,000 as wages, you might choose to direct some of that money somewhere else first. Depending on what you're sacrificing it into, this can provide tax advantages. But not all salary sacrifice arrangements are the same. Let's look at the most common types. Type 1. Salary sacrificing into super. This is the most common form of salary sacrificing in Australia. Let's say you're earning $100,000 per year. You decide to salary sacrifice an extra $5,000 into your super fund. Instead of paying your normal marginal tax rate on that money, the contribution is generally taxed at 15% inside super. For many workers, that's significantly lower than their personal tax rate. The result? More money invested for retirement and potentially less tax paid today. This is one reason many Australians use salary sacrifice to boost their retirement savings. However, remember that money inside super is generally locked away until retirement age, so don't sacrifice money you'll need next month. Type 2. Salary packaging for health and charity workers. This is where things get really interesting. Some industries receive special tax concessions. For example, many workers employed by public hospitals, private not-for-profit hospitals, charities, religious organizations, certain aged care providers may be able to salary package living expenses. Instead of paying for some expenses from after-tax income, they can pay them from pre-tax income. This can include things like mortgage repayments, rent, personal loan repayments, credit card repayments. Depending on the employer and arrangement, the result can be thousands of dollars in tax savings each year. This is one of the biggest employee benefits available in Australia, but eligibility depends on where you work. Not everyone can access it. Type 3. Novated leasing. Another popular form of salary sacrificing is a novated lease. This is where your vehicle costs are packaged through your employer. Depending on the arrangement, expenses such as vehicle repayments, registration, insurance, servicing, fuel may be included. Many Australians use novated leases because the payments are made through payroll and can provide tax benefits. In recent years, electric vehicles have become particularly popular under novated lease arrangements because certain EVs may qualify for additional tax concessions. However, novated leases aren't automatically cheaper. You should always compare buying outright, using a standard car loan, using a novated lease before making a decision. The numbers can vary significantly. Type 4. Meal entertainment benefits. Some salary packaging employers also allow employees to package meal entertainment expenses. This could include restaurant meals, cafes, catering expenses. Again, this is generally limited to eligible sectors such as healthcare and not-for-profit organizations. Not every employer offers it, but for those who do, it can provide additional tax savings on spending you'd be doing anyway. Type 5. Remote area benefits. Australians working in certain remote locations may also have access to additional salary packaging arrangements. These can sometimes include benefits relating to housing, rent, utility expenses. The exact rules depend on the location and employer. This isn't something most city workers encounter, but it's worth knowing if you're employed in regional or remote Australia. Is salary sacrificing always worth it? Not necessarily. Salary sacrificing can reduce your taxable income, but it doesn't magically create free money. For example, if you salary sacrifice too much into super, you may end up with less cash available for everyday expenses. And some packaging arrangements include fees that can reduce the overall benefit. You also need to watch contribution caps when salary sacrificing into super. Going over the limits can create unexpected tax consequences, so it's important to understand the rules before jumping in. For some Australians, these arrangements can save hundreds or even thousands of dollars each year, but the benefits depend heavily on your employer, your industry, and your personal circumstances. So if your workplace offers salary sacrificing or salary packaging, it might be worth taking a closer look. You could be leaving money on the table without even realizing it. If you found this video helpful, let me know in the comments whether your workplace offers salary sacrificing and what type you use. And if you enjoy simple Australian money content covering tax, mortgages, super, government payments, and wealth building, make sure you subscribe to